Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie. Stories that set your agenda. Asian stocks and futures extend losses as uncertainty over the Fed's policy outlook weighs on sentiment. Palantir shares slide despite an upbeat earnings report. Oil also in focus as Saudi giant Aramco exceeds forecasts as higher output outweighs weaker prices. BP investors stand by for updates on its divestment program. Plus, President Trump endorses Andrew Cuomo, threatening to withhold federal funding if Zohran Mamdani wins today's election for New York City Mayor. We have earnings crossing right now from Philips, of course, the maker of healthcare equipment, the focus on orders, particularly when it comes to the US market. Third quarter adjusted earnings for Philips coming in slightly above the estimates. In terms of adjusted EBITDA, then 531 million euros in the third quarter. The estimates had been for 486 million. So it's a pretty comfortable beat in terms of the adjusted earnings for Philips in the third quarter. In terms of the margin, they now see full year 2025 margin at the upper end of the range. So this is a positive outlook coming through from Philips. We know the US market is central, of course, reiterating its full year 2025 outlook, but sees margins now at the upper end of the range. And in terms of sales numbers in the third quarter, coming in at 4.3 billion euros, roughly in line with the estimates. But again, it is the earnings story, the profit beat that's come through for Philips, and the guidance in terms of margins for the full year. Adjusted earnings, EBITDA, coming in above the estimates. We will be speaking to the CEO of that company, Roy Jakobs, at 7:15 a.m. UK time. So stay tuned for that earnings conversation with the CEO of Philips. Let's get to the broader markets right now because it's risk off across global equities. You're seeing that percolate across Asia, the focus on South Korea and concerns about SK Hynix being referenced by regulators there. And then you have the downside coming through from Palantir, despite that beat on earnings. Concerns about valuation, of course, for that key AI company, and commentary from Fed officials. A mixed picture. Goolsbee talking about concerns around inflation, whereas Lisa Cook says her focus is more on the labour market. It's a mixed picture from those Fed officials. European futures then pointing lower by 0.6%. FTSE 100 futures here in the UK looking to drop 23 points. S&P E-minis after eking out modest gains yesterday, pointing to a sharp drop of 0.8%, but it's even deeper for the Nasdaq 100, looking to drop right now 288 points, called lower by more than 1%. Let's flip the board and have a look cross asset then. Focus once again on the oil markets. Crypto is interesting as well. We'll get more details on that later in the show. The 10-year right now yielding 4.09. Again, Fed commentary in focus, a move of just 1 basis point. Euro dollar at 115. A little soft on the single currency on 3 days of strength for the greenback. Just currently down 0.1%. The euro, $64 a barrel, close to 65 on Brent, but down 0.3% in the session today. And gold also weaker as well by 0.8, just shy of $4,000. Let's cross over to Winnie Su right now in Hong Kong with a check on the Asian markets.
Morning, Tom. Overall, we are seeing quite a bit of a pullback when it comes to the Asian market. Like you said, it's overall that risk-off mood. Investors are trying to navigate their way through all these mixed signals from the Federal Reserve officials and also some weakness when it comes to U.S. macro data. Now, leading losses here today are the Korean stocks. You can see that the Kospi is down over 2%, which is a big reversal from yesterday's gains. And leading losses in the Korean stocks was SK Hynix, and it was down after the stock exchange issued an investment caution after a strong rally in that stock. Now, we flipped the board and take a look at what was going on in the Australian market because we just had the RBA's decision to keep rates steady. We are seeing a bit of a downside when it comes to the Australian stocks, and also the 3-year yield here up 3 basis points. And that came after the presser just now saying that the RBA actually actually was considering maybe not to have further hikes down the road, further cuts down the road. So that was kind of a bit of a hawkish tilt there. Now we turn our focus to the Japanese market as they come back online after a holiday yesterday, and seeing here still some downside when it comes to the overall benchmarks, with the topics down slightly less than 0.5%. However, that is still a bit of a shallower decline compared to the overall Asian market, because we have a bit of a positive news when it comes to the earnings from these chip-related names. So you can see LaserTech here, Tokyo Electron, both had some positive earnings, and they were also talking about kind of this solid AI demand to come. So it is quite a reversal when it comes to the story that we are hearing from Palantir. Although they had that positive earnings, investors seem to be less impressed. Back to you, Tom.
Thank you very much indeed. Let's get more details on the Palantir story then. Palantir shares falling in extended trading despite the AI software company raising its annual revenue outlook to $4.4 billion. The firm's third quarter sales outpaced analyst estimates, with growth for its AI and data analytics products it described as otherworldly. While analysts are broadly positive on the report, they note a concern over valuations, with shares up more than 170% this year. And Alphabet has sold $17.5 billion of bonds in the US after issuing 6.5 billion euros of notes in Europe. Sources say Alphabet priced the bonds in the US in 8 parts, ranging from 3 to 50 years. The Google parent's euro-denominated bond sale, the second biggest from a non-financial company this year in the region, was 250 million euros more than had been expected. The moves add to a wave of borrowing from tech companies as they invest aggressively in artificial intelligence. Now, the Wall Street Journal reports that US President Donald Trump torpedoed plans to discuss the sale of NVIDIA's Blackwell chips to China. Talking of AI, US top officials, including Secretary of State Marco Rubio, told the president it would threaten national security. Bloomberg senior news desk editor Balash Pence joins us from Hong Kong with the details. Balash, what more do we know about this then?
Well, if you remember, Tom, these Blackwell chips were one of the most hotly anticipated topics as we went into that meeting between Presidents Trump and Xi last week in Korea. These are the most advanced chips that NVIDIA has, and they're crucial for AI development. So everybody was waiting to see whether the two presidents would discuss them and China might get access to them. After the meetings, President Trump told us that the chips did not come up, and now we found out why. Obviously, Jensen Huang has been trying to convince him to put them on the table, to at least start the discussion with China. And now we found out that the most senior administration officials, including Marco Rubio, including Howard Lutnick and Jameson Greer, were able to convince him at the last minute that putting these on the table, that allowing China access to these very, very advanced chips would be a question or risk to U.S. national security. So they ended up being not discussed at this very crucial meeting, and they still remain out of reach for China.
Okay, and this comes as China, as well as pretty recently urged the US to avoid red lines, so that their trade truce can hold. What have we been hearing from Chinese officials? What are those red lines?
That's right. So they named 4 areas as their red lines, them being the issue of Taiwan, the issue of China's political system, democracy and human rights, and the right to development. And these are important issues to China, which they do not want to breach, which they do not want to discuss with the U.S. And just the fact that they're bringing it up so soon after the two leaders reached a 1-year truce over their trade agreement shows how delicate that relationship remains, and how many different ways that trade truce can still be derailed. So both sides are sending messages to each other that there's still a lot to discuss, and there's still a lot to settle between the two. So as investors look at this very important trade relationship, it's good to bear in mind that not everything is settled and things can go off the rails pretty easily, pretty quickly.
Okay, an important reminder of that fact. Bloomberg's senior news desk editor Balash Pence in Hong Kong with those details. Balash, thank you for that update. Meanwhile, to the US and elections there, of course, with a lens firmly on New York. New York voters heading to the polls today in the city's mayoral elections. President Trump endorsing Andrew Cuomo on Truth Social last night. He wrote that if Zohran Mamdani wins, it would be, quote, highly unlikely that the city would receive federal funding beyond a bare minimum. Joining us now is Bloomberg's Daybreak editor Mark Perrier for the details. It's a big day then for elections in the US, again, with New York in focus. Talk to us about Trump's endorsement of Andrew Cuomo.
What a day today. As you said, the midterms next year, It launches the whole process leading up to next year. New Yorkers have a lot to think about today. Obviously, Trump's words will have some impact on the electorate today. But also, New Yorkers are facing the whole issue of the cost of living, which is Mamdani's complete platform. But the risk of losing funding is obviously potentially disturbing to New Yorkers.
It's something like 6% or something of the New York budget approximately comes from federal funding. What are the potential? What would a win? I mean, very much the polls suggest Mamdani has got this in the bag. We'll of course wait to see the results, but that's what polling suggests. What would a win then for Mamdani mean for the city of New York?
It could mean a lot. His policies are seen by some as somewhat radical. They involve boosting housing, transportation, potentially running the buses for free, higher taxation for the wealthy and corporations in order to pay for all of it. Potentially not that Wall Street friendly, but it's also, the big picture here is for the Democratic Party. A vote for Mamdani may mean more of a left-leaning approach to the Democrats, and not all Democrats really support him. I think there's a very careful approach to him. It'll be interesting to see how it plays out today and in the weeks to come.
And that's the point for our global audience. This has significance beyond New York. It's also crucial for the financial centre that is New York, but ramifications for the electoral map, potentially at least how the Democrats and Republicans shift their approach ahead of the midterms. Yes. Across the country. Those implications are there then, potentially.
The implications are there. Today is a big day, not only in New York, but you have Proposition 50, which is a redrawing of the map in California. That's coming up on the ballot today. That will have an impact. You have governorship elections in Virginia and New Jersey. The Democrats are looking for big wins today. They're looking to reset the agenda and re-energize the party.
Okay, Mark, thank you very much indeed on a significant day when it comes to elections in the US. And we will be monitoring that, of course, for you and bringing you all the details on all the results as they come through. Bloomberg's Mark Perrier. Mike Bloomberg, it's worth noting, Michael Bloomberg, founder and majority owner of Bloomberg LP, the parent company of Bloomberg News, has supported a super PAC backing Andrew Cuomo's mayoral campaign. Here's what else to think about today then, 7 a.m. UK time, BP earnings, so we'll get more details, more earnings coming through from one of the big oil majors, of course, and then we will be hearing from the BP CEO, Murray Auchincloss, as well. That interview is coming up shortly after 7 a.m., shortly after those earnings drop, so that's a crucial interview for you to tune into. 7:40 a.m. UK time, the ECB's Christine Lagarde will be speaking on the Eurozone, that speech coming out of Sofia. And on the US earnings front, Uber and Pfizer, as well as AMD on the chip front, all reporting later today. We'll be across all of those earnings for you. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. And upfront and focused in today, of course, is the sell-off we're seeing across equities globally, at least for today. Coming up, are we heading for a Santa rally? Today suggests that could be challenged. My next guest is bullish on European equities. We're going to talk markets with Benedict Lowe of BNP Paribas Markets 360. That's coming up. We're also going to be joined by the co-founder and chairman of oil trading giant Gunvor. That interview live from ADIPAC in Abu Dhabi. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get back to the markets then. You're seeing futures lower when it comes to Europe, down 0.8%, sharply lower in the US as well. S&P E-minis called lower by 0.9%, Nasdaq 100 called lower by 1.3%. Part of this, it seems, coming from the mixed commentary from Fed officials, but also caution around valuations. We are still, of course, firmly in earnings territory. We've been getting BP earnings at 7 a.m. UK time. But let's start on the downside that's coming through this morning and bring in Benedict Lowe, BNP Paribas Markets 360 equity derivatives strategist, joining me around the desk this Tuesday morning. Benedict, always great to get your insights. Let's start on the here and now. What is, do you think, the key catalyst for the downside we're seeing in markets today?
Yeah, I would say it's probably healthy consolidations. We have stock market that are trading close to all-time high, whether you look at the US or Europe. So I think any investor is looking for some signs of downward news. But our view remains bullish into year-end.
Underpin, or at least unpack for us, what underpins that bullish view longer term, or at least into year-end for European stocks?
Yeah, so first of all, we're seeing some signs that the data is picking up in Europe. Whether you look at PMI data in Germany a few weeks back, investment confidence indicators are also on the rise. And this is happening at a time where positioning in Europe remains neutral. And most importantly, when you look at flows coming from US investors, they're starting to pick back up into Europe. We've had 3 consecutive weeks of positive inflows from US investors into European equities, large inflows that we hadn't seen since March this year. So we're seeing this momentum picking back into the Eurozone. What
is your level of confidence that momentum in terms of the flow show from the US to Europe continues?
I would say that we're probably going to see a period of continuing inflows. I think the prospects around Europe is improving. We've been waiting for this cyclical recovery to happen for months, if not years. And we're starting to show some signs. There was a lot of skepticism from the investor side. So I would say that warrants some kind of reallocation of flows away from US investor, from the pool of US into European equities.
And it's interesting that European equities actually year to date haven't underperformed the US that much, despite the fact that there is essentially very little AI in Europe. If you strip out the likes of ASML and SAP, there isn't that massive AI exposure. And yet European stocks year to date have not significantly underperformed their US counterparts.
Yeah, so we had strong performance of the banking sector. That remains one of our key long into year end. We also think there's going to be some catch up in the healthcare sector. So we have a decent mix of sector pools that we expect to perform well into year end.
Catch up in healthcare.
Yeah.
And you remain exposed. You think the banking trade continues into year end? That trade hasn't closed, given the run up that we've seen for European banks and the performance in terms of earnings.
Yeah, so we've seen definitely a strong outperformance of banks this year. We think the outlook remains positive. I've mentioned the cyclical recovery that tends to be good for cyclicals like banks. The German fiscal stimulus will lead into higher demand from a loan perspective. That should also be good for the business of banks. We've had decent earnings, and we think the setup remains supportive for banks.
A key headwind for European stocks at the start of this year was euro strength. Is that fading into 2026? What assumptions are you making about the euro?
So our view on the euro remain stronger versus the dollar for next year. But what matters also for equity investors is the pace at which that happens. We've had at the start of the year a huge appreciation of the euro versus the dollar. That was a headwind for the past earnings season. Now we've seen some stabilization. If that happens at a lower pace, we think equity market can weather that. If it happens at a stronger pace, that's when this tends to be more headwind from an earnings perspective.
Okay, so it's not necessarily the appreciation itself, it's the pace of that appreciation, and that's going to be important in terms of the cadence in 2026 when it comes to euro strength. Across the earnings that we've seen so far out of Europe, what has stood out to you in terms of the strength or indeed some of the weaknesses, some of the challenges, sectors that you might avoid, or something interesting that stood out from the earnings that maybe you hadn't expected?
Yeah, I would say overall, the earnings season has been better than the previous earnings one. So we're starting to see a bit of momentum also from the earnings perspective. We've not been as strong as in the US, but at least momentum is picking up. Now, what I would say is quite interesting is the market reaction that has been skewed positively towards those earnings. And what I mean by that is that beats were better rewarded than misses were punished by the market. This suggests to me that, first of all, expectations were quite low into this earnings season, but also that optimism is growing on the picture of the outlook for European equities.
What do you do with the China-exposed European big cap names at this point. Do you make an assumption that China's going to start to turn around? Do you want to be focused on very domestically focused European stocks? How do you think about the internationally exposed, the China exposed names?
So I would say, first of all, our main exposure remains the more locally impacted stock, because we expect that cyclical recovery, as I mentioned, to happen. So that should benefit from those sectors I mentioned, the banks, but also other sector that tends to be more cyclicals. On the China part, we do expect a pickup in demand, and that should also feed positively into European stock. But I would say primarily the picture is one where growth is improving in Europe, and that should feed into higher expansion of multiples into European equities.
Okay, Benedict Lowe, thank you very much indeed. Breaking down that constructive view on European stocks into year-end. BNP Paribas Markets 360 equity derivatives strategist Benedict. Thank you. Coming up, the Goldman Sachs chairman and CEO tells Bloomberg that deal-making momentum is building again. We bring you some of that interview with David Solomon. That is next. This is Bloomberg. Goldman Sachs chairman and CEO David Solomon says the M&A backdrop looks constructive heading into 2026. That's as US deal-making ramps up in the final months of the year. Solomon spoke with Bloomberg in Hong Kong.
So the U.S. is a huge part of the global M&A market, either for target or acquire.
Right.
I would say it's extremely constructive, and we see it, in our advisory business. You can take a look at our, M&A revenues last quarter, which are a reflection of deals closing. But if you also go through our earnings call, we made a comment about the level of our M&A backlog,
yes.
The very high level of our M&A backlog. Yeah. And that's just an indication of the fact that there's a lot of activity inside the firm. I'd say this is really rooted from the fact that we went through a period for 4 years during the Biden administration where if you wanted to do something strategically, if you wanted to do something significant from an M&A perspective, whatever the question was, the answer was no. We're now in an environment where whatever the question is, the answer is maybe. And I think CEOs are unleashed in believing that they have a chance of doing strategic things to advance their position, to advance their scale, to advance, how they sit competitively. And so we see a tremendous backlog of significant consolidating situations, what I'll call large cap M&A. Large cap M&A in the United States is up very, very meaningfully. Deals over $10 billion, very, very meaningfully year over year. And so I think we're in a pretty constructive environment. And my expectation is 26 and 27 will be quite constructive in terms of large cap M&A, particularly in the United States.
Goldman Sachs chairman and CEO David Solomon speaking to us exclusively. In other news, Millennium Management CEO Izzy Englander has sold a roughly 15% stake in his hedge fund to a group of investors. Sources tell Bloomberg the roughly $2 billion sale values the company at about $14 billion. The deal diversifies ownership among several large institutions and top executives. And Point 72 Asset Management is creating a new equities unit, joining other multi-strategy hedge funds that operate several stock-picking businesses. A note to employees seen by Bloomberg says a new unit will be organised starting January. The firm's billionaire founder, Steve Cohen, says Point 72 has meaningfully increased both team count and capital allocation for the new strategy. Coming up, we're going to speak to the co-founder and chairman of oil trading giant Gunvor. That interview live from ADIPEC in Abu Dhabi at a time, of course, when OPEC Plus has decided to pause putting additional barrels of oil on the market for January of next year. A crucial conversation with Chinese demand, no doubt, in focus as well. So stay tuned for that. That's coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London, and these are the stories that set your agenda. Happy Tuesday, everyone. Asian stocks and futures extending losses as uncertainty over the Fed's policy outlook weighs on sentiment. Palantir shares slide despite an upbeat earnings report. Oil in focus as Saudi giant Aramco exceeds forecasts as higher output outweighs weaker prices. BP investors Stand by for updates on its divestment program. Plus, President Trump endorses Andrew Cuomo, threatening to withhold federal funding if Zohran Mamdani wins today's election for New York City Mayor. Let's get to the markets then. Risk off across these global equity markets. We were just hearing from BNP Paribas suggesting that there is further upside for European stocks into the year end. For today, though, it is negative sentiment rippling through these markets. Caution around some of the Fed commentary and on the earnings front as well. Valuation stretch around Palantir causing some concern when it comes to the Nasdaq 100 futures, pointing lower by 1.3%. S&P E-minis looking set to drop 0.9%, almost a full percentage point. Here in Europe, European stocks called lower by 0.8%. FTSE 100 futures called lower by 40 points. Let's flip the board and have a look cross asset then. We've been hearing from the likes of Goolsby, but also Lisa Cook, both of those individuals talking about different parts of the Fed's mandate and where their focus is. Lisa Cook concerned about the jobs market, Goolsby more concerned about inflation. The 10-year yielding 4.08, a move of 2 basis points in terms of yield on the benchmark. 115 on euro dollar, just marginally higher now on the single currency. $64 a barrel, 65 cents on Brent, down 0.4%. And gold softer by 0.6, back below $4,000 per troy ounce on the yellow metal. Let's get back to the oil space right now, though. Saudi Aramco has posted a surprise increase in third quarter profit as a production boost helped mitigate the impact of lower crude prices. The rise in output helped the oil giant break a years-long streak of falling earnings. Free cash flow at Aramco exceeded the dividend payout for the first time in about 2 years. And staying with oil, Brent crude has dipped after a 4-day run of gains as the market weighs that decision by OPEC Plus to pause output hikes early next year. Let's cross over to Bloomberg's Jumana Pasechi, who is at the ADIPEC Energy Conference in Abu Dhabi with a very significant guest. Jumana.
That's true. And yesterday we were talking about that OPEC Plus decision, but the other big theme for short-term markets has been the decision by the Trump administration to impose sanctions on those 2 Russian oil companies. And I'm very happy to say that I've got a key voice from the industry with me right now, the CEO of Gunvor Group, chairman of Gunvor Group, Torbjörn Törnqvist. Really good to be speaking to you. So many people want to hear from you. And for the viewers who are just tuning in now, obviously the big news was that Gunvor has decided agreed to buy the international assets of Lukoil International. So I'm going to start off by asking you, at what point did you begin having discussions with Lukoil about this agreement? Was it before the sanctions were announced or afterwards?
Well, I mean, we did have some discussions with Lukoil for some specific assets which we had discussed. So actually it was during this period where this happened. And I think clearly it evolved into discussion, could we do something bigger? And we have agreed with Lukoil to acquire all of their international assets. There's no Russian assets included in this, just international assets. Mm-hmm. And we are now in discussions with the relevant authorities to present this transaction. We believe it is satisfy all the concerns that may arise from a transaction of this magnitude and giving the parties involved. So we're pretty confident that this deal actually ticks off the critical boxes in that one.
Do you think that the U.S. government will be satisfied that this deal isn't going to be benefiting Russia?
Sorry, that they will be...
The U.S. government will be satisfied that this deal won't be benefiting Russia?
Yeah, it won't. Because obviously, I can't go into the detail, but it is obviously, we are assuring them that this is not the case. And it's a clean break. The moment the deal is done, that's it. We will do that, and we will be in a fully transparent dialogue with the U.S. authorities and other relevant authorities about this.
No deal size was disclosed, but is it fair to assume that you bought the assets at a discounted price?
I do not want to comment on that.
Okay, fair enough. Where does these international assets fit into your overall portfolio? Why is Gunvor a good fit?
Well, I think that obviously there's a lot of assets they have, and a lot of this is very trading related. There's a downstream, refining, and all these things, something we feel very confident in. We have it ourselves. So we think that some of them will benefit quite nicely into our portfolio. Some may not, it's clear. There are assets perhaps that we would feel should be better preserved in other hands, if you know what I mean, right?
Okay.
But I think that's just very premature to discuss that. But obviously we wouldn't do that if we don't feel confident that we can handle this transaction in all aspects. Yeah.
Okay. So you see yourself as the long-term holder of these assets, and perhaps later down the track you could think about what you're going to do with the overall portfolio.
I always think long-term, of course. And when the opportunity is there to build something long-term, we've proven that we can act quite fast.
What if the sanctions are lifted on Russia? Is there a possibility that Lukoil would be able to buy back the assets that have just been agreed to be sold to Gunvor, or is that not an option?
No.
Okay.
No, absolutely not. Okay. This is a clean deal. Once it's done, that's it. We have nothing to do with Lukoil anymore.
Okay, okay. So we talked about where it fits into your overall portfolio. How do you see the trading outlook from here onwards?
How difficult?
How do you see the trading outlook from here?
Well, I think
a challenging start to the year.
Yeah, I mean, generally trading with or without this operation is difficult. It's challenging. I mean, it's more challenging than it has been for a couple of years. And I think if you still talk about this transaction, it makes no difference this or that. I think we have to manage the markets the way they are.
Yeah, a bit of a perhaps existential question for you, because I know that you've been involved with the purchases of these assets, but a big theme for the market has been the impact that these sanctions are going to have on Russian supply that hits the overall market. And the expectation is that there's a big supply glut that's going to hit in Q1 of next year. Because of these sanctions, do you think that that sort of undercuts that possibility?
Yes, I think obviously the latest sanction is something that the market reacted to. The prices actually went up. And it's a bit of a different this time around because when you specifically target the two companies like that and prohibit buyers to transact with them, it creates confusion. I think the main question for the market right now is how much of Russian oil will not find itself into the market. Mm-hmm. And I think that's the main question.
Yeah.
If everything goes, I think this market are going to look soft. We will see a bit of price pressure. If some of the Russian oil being stranded somewhere, probably a little bit more of a balance. We just don't know at this point.
Yeah. Do you think that OPEC Plus, their decision to hold steady for the first couple of months of next year is perhaps in reflection of the softer market conditions that are to come, or just a reflection of seasonal demand and the fact that we're coming up against what has been quite a strong summer?
Yeah. I think so far OPEC has done a pretty good job. They have eliminated some of the quota restrictions and not yet fully perhaps filled them up with physical oil, but they have timed this pretty well, I must say. And I think they are cautious. They're sending a word of caution by saying this, that they are aware of the downside here. Yeah. And I think that's reassuring for the market.
Yeah.
Nevertheless, we think that the market is a bit on the heavy side. Excess is now willingly absorbed, going into storage. Storage levels are low around the world, so there is a room to build storage.
Yeah.
So I don't think that there's a risk for any immediate drastic price fall. Okay. I mean, there's always a risk, if you know what I mean, but I would put that a little bit less likely than perhaps many thought.
Okay, so do you see levels sort of holding in around here over the next 6 months or so, like 60 to 65?
Yeah, I mean, I think given what we see, I would say that it's going to fluctuate. We are going into a seasonally weaker period, so yes, you could see a bit of softening, normal, but I think I'm not in the league of people who think that this market will dive deep into the 50s. I don't think so.
Okay.
That won't happen.
When it comes to but you're getting a lot more competition on the trading side as well. So how do you navigate that?
Well, we'll try to do our best. I mean, we have to adapt always to changing market circumstances. It's true. There are more companies, major producers from this region are building their own.
Yeah.
Which, of course, is given also opportunities. We can work with them in the trading field, but it also forces us to think slightly different. I mean, we are diversify our trading, and we're also investing. I mean, what we're now trying to do with Lukoil is obviously giving a network around our trading to work around. So I think that's a way for us to address this, more investment along the value chain.
Yeah. And final question for you, to go back to where we started. This Lukoil international acquisition, what does that do for your own 85% ownership in Gunvor?
It has nothing to do with it.
It's not going to have an impact. Okay. Sir, thank you so much for fielding our questions today. Again, a gentleman that many people in the energy industry wanted to hear from. Fascinating to get his views. That was the chairman of Gunvor Group. I'll toss it back to you guys.
Okay, Bloomberg's Jumana Pasecci speaking with the CEO of Gunvor Group on the ground for us at the ADIPEC Summit, of course, and ADIPEC conference that continues today. Jumana, thank you. Coming up, we're going to switch focus to AI. Will we soon be sitting alongside AI teammates at work? Many of us already are. That's what Notion are working on. We're going to chat with their Chief Revenue Officer next. The expansion in Europe is focused as well, and a key part of the strategy. This company valued at around $10 billion US. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Palantir has raised annual revenue outlook to $4.4 billion US and outpaced analyst estimates in its latest figures. Despite that, of course, post-markets, Palantir is down and took a bit of a hit on concerns about valuations, and that is certainly a topic within the AI space as well. Meanwhile, Notion, a company valued at, you'd guess, a little bit more north of $10 billion US. It has about 100 million users, and it's pushing into Europe with hubs in Paris, in Munich and London. And we can speak to Erica Anderson right now, Chief Revenue Officer at Notion. Partners, clients including OpenAI, NVIDIA, Figma and many more. A large chunk of the FTSE 100 as well. Erica, thank you for joining us bright and early around the set. What does Notion do?
Yes, Notion is an AI-connected workspace. It helps teams come together to collaborate on documentation, manage projects, look at how AI can help automate your work, organize knowledge. So it's a place where people can come together to do work. And it started from a simple idea, which is modern work has become very fragmented. People jump from a tool to a tool to a tool. And Notion is a unified place where your notes, your documents, your projects, and AI now live side by side.
And you launched before the launch of ChatGPT in November 2022. So you're not jumping on the bandwagon of this.
We were early on the AI forefront and had a product in private alpha before ChatGPT came along, and we've been building the past few years, continuing to improve Notion AI.
You recently topped $500 million in terms of annual recurring revenue. What is growth looking like? Does that picture, how does that evolve into next year?
Yeah, we've been accelerating our growth, and we hit that milestone earlier this year, 500 million ARR. We continue to see growth across the business and individuals, teams, global enterprises that are coming onto the platform. So adoption's been really strong, driven by AI adoption and monetization, and then expanding into the enterprise.
Where is most of the growth coming from?
It comes from teams and individuals as well as enterprise companies. Our fastest growing segment is our enterprise.
Enterprise. Are there particular segments, particular sectors where they're seeing greatest pickup and greatest demand, and other sectors are they kind of more cautious and holding back?
You know, we're very prevalent in terms of the tech sector, but seeing a lot of good momentum in the non-tech sector as well, as people are looking to modernize the way that they work and bring AI side by side in terms of the work they do.
Is Europe a more challenging environment? So you're opening hubs in London, Paris and Munich. I hear a lot of the time from CEOs based here and in the US that adoption takes longer, more risk-averse enterprise in Europe. Are you seeing that challenge as well?
I wouldn't say we're seeing that challenge. I think there's certainly more requirements around data, privacy, but I wouldn't say that we're seeing adoption be slower than other regions around the world. We see the same amount of interest, and change management across all of our regions around the globe is something that we're working with customers on, especially with AI. That's in particular, new behaviors for people to learn.
And you talk about data, and you now give, I believe you give your clients now the option to store their data in Europe, European clients versus in the US. Previously, they only had the option of storing in the US.
That's correct.
What proportion want to take that choice of storing it in Europe? Is it the majority?
It's relatively new,
right.
But we're seeing good adoption in terms of, this has been just the last few months, and seeing good adoption in terms of companies that are starting there in terms of our data region in Frankfurt.
I've spoken to people within the investment community here and founders who say this is the year, we're getting towards the end of this is the year of AI agents. And you've recently launched Notion agents as well.
Yes.
What is the demand for that particular product looking like, and how competitive is that space now, agentic AI?
Yeah, I think, we're seeing a lot of people in the space. Obviously, agents started in the support world and coding. We feel like we're one of the first ones in terms of a general knowledge work agent, and we're really seeing adoption be quite strong in terms of people looking to have this type of assistance where they can free you up to do more of the higher functioning strategic work and have the agents do more of your busy work.
What does it do to the workspace, to workforces, to jobs?
I think that our position on this is that it hopefully is freeing people up to do the idea generation, be a creator. You're likely going to be managing multiple AI teammates in the future, and that's all in the hopes that it's doing higher level work, creative work.
So I hear this a lot from tech CEOs, and yet I look at the numbers, the job cuts coming through from Microsoft and from Google and from Intel, and we're talking tens of thousands of tech jobs being slashed across many of the biggest tech names in the US and in Europe as well. So how do we square those two things?
Well, I think we're still early in the journey. I think you can be seeing some reaction now, but we still haven't seen the value creation we all believe is going to be quite significant. And so I think you're going to see new jobs be created, but we're all early in that journey.
Do you think we're in an AI bubble?
I don't think we're in an AI bubble. I think this is like the next big evolution, and I think we are literally just seeing the beginning, and I don't think we're even imagining still all of the possibilities, and so I think this is very real, and I don't think we're in a bubble.
Do you list next year as an IPO on the agenda for Notion?
We're very focused on what we call Notion 3.0, which is making those agents and our AI adoption very successful. We don't have any plans to announce anything related to an IPO, but we've got a very strong financial profile and growth.
Okay, you raise again this year, or is that the next year story?
No plans to announce there either.
Okay, give me a target on ARR for next year then. So you met 500 million this year.
Yeah.
What would you be happy with in 2026? Is it 700 million, 800 million?
We just want to keep growing, see that AI adoption going. That's what we're really after.
$1 billion is what you steered GitHub to.
That's correct.
In your previous role.
Yes.
So you got to that $1 billion ARR mark for GitHub.
Yes.
So that must be that's a target for you.
That's a personal target.
That's a personal target for you for Notion.
Yes.
Okay, Erica, what kind of time frame on that?
No time frame to share. Just want to keep growing, keep the adoption
Erica,
going.
Thank you very much indeed. Really appreciate it. Thank you for coming in bright and early on the story around Notion, the expansion in Europe as well, the growth and the adoption story when it comes to agentic AI as well. Notion's Chief Revenue Officer, Erica Anderson. Now, some of the stories making the news this Tuesday. Funds managed by Apollo Global Management have agreed to invest $6.5 billion in Ørsted's Hornsea 3, the UK offshore wind project that's among the world's largest. The deal involves a commitment to pay for 50% of the remaining construction costs and will give the funds a 50% stake in the joint venture. Hornsea 3 is expected to generate enough power for 3 million UK homes. Pre-budget analysis by the Resolution Foundation says the fiscal gap to be filled by the UK Chancellor will be smaller than widely feared because strong pay growth has offset an anticipated productivity downgrade. The think tank puts the fiscal deterioration since March at around £14 billion, far below the estimates of most forecasters. Rachel Reeves is reported to be planning to make a pre-budget address as markets open this morning. We'll bring you headlines from that. Plenty more coming up. Stay with us. This is Bloomberg.
Given that we are likely moving in the right direction, I thought a 25 basis point cut was appropriate. But again, December is a live meeting, and I'm attentive to all the indicators that I mentioned and many others. So it's a balancing act, and it always is.
Federal Reserve Governor Lisa Cook. She also said that her emphasis, or at least her focus, is a little bit more on concerns around the labour market than inflation. So a different message to Austin Goolsbee, who said his focus is a little bit more hedged towards the inflation story. And of course, it's those mixed messages that are leading to some of the downside that we're seeing in global equities, or at least it seems to be one of the factors. I want to take a look back in terms of European performance versus US performance since April. And interestingly, despite the fact that you have very little AI exposure in the European basket versus US counterparts, European stocks, when normalised across the European stocks 50 since that period of time, have not significantly underperformed their US counterparts. We have an MLive piece on the fact that there is diversification coming in terms of movements into European stocks, but also EM and Japan. Japan performing better than the US. Emerging markets as well performing better than the US. So yes, the Sell America trade is certainly not holding up, and you see that in terms of the performance of the bond market, but in terms of diversification, it is there, and Europe is part of that story. Let's flip the board and have a look at where we stand on the government shutdown, because that is one of the risks when it comes to the US market. Many would say it's not a huge market risk, but we are now equal in terms of the longest shutdown on record. We're equal with the shutdown that we saw back in December of 2018, 35 straight days. If we get to tomorrow with this shutdown continuing, and every sign is that that will continue, then we'll be on 36 days, which will be the longest shutdown then in US history. Let's flip the board and have a look at a very different space. This is the crypto space, and we saw, of course, this liquidation event about 3 weeks ago. Crypto's under pressure again. Bitcoin under pressure. This is a 2-day chart of Bitcoin, down 5%. And there was the liquidation event about 3 weeks ago, and you haven't seen a recovery since that. In fact, institutional investor buying of Bitcoin is now lower than the numbers in terms of new coins being minted. That's the first time we've seen that in about 7 months' time. This is a crypto hangover that we're seeing, and will it continue? BP's coming up with the earnings and the CEO interview on the opening trade. That is next. This is Bloomberg.